Yeah, hi guys. This is a new video on studying the best performing stocks uh, that we saw in the last 2 months. The rally that we've seen, which started from 7th April. Um, I'm going to study the stocks that have delivered the best moves. And to define best moves, I've just simply taken the the value that these stocks have. I mean, by how much amount they have gone up. So to find out the best stocks, what I did was I just opened this screener and this created this performance over 3 months, and it's very simple. Just go to screener and then put market and performance of 3 months above 30%. Why I've taken 3 months? Ideally, it should be 2 months because it started from 7th April, but you don't have that option here. In the manual setup, it is only 3 months or 6 months or 1 month. There's no custom option here. So 3 months above 30% exchange NSC, and then this volume criteria to filter out the illiquid stocks, though there are many illiquid stocks even after this filter. So you can play around with this number. So what I've done is this is the result, and this is the performance. So I've sorted in the descending order, and basically this means this is the best uh, stock. It delivered for 59% in the last 3 months, but it may not be. So let's just study one by one what they had in common and how we can. So watch this video till the end. How we going to use this information, because this is in hindsight, it's easier to study. But using these clues, you can identify, because now again we are coming down in the last 2 days, 2 3 days we have come down. So in this scenario, how are we going to use this information to find the future best performing stocks and hope to be in one of them? So yeah, so now let's study this. So I'm going to compare the performance of the stock with the index, and the first one is KCK. It You can clearly see it's not the type of stocks that we can trade. It's completely illiquid and erratic. So I'm not going to study this. I'm only going to study stocks which we can actually like, which meet all the criteria and we can trade. We would have traded if we were here. So next is this. This also on 7th April. On this day was only 1 second. Yes, so this, even the second one we would have not traded because around this time it was only 20 rupees something, and I don't trade stocks below 30. In fact, I'd even avoid anything less than 50 also, but I've traded 50, but 30 and below I will not, I don't really touch them. Next is this, again illiquid. Then this is one that I find liquid enough. So let's just study this stock. So on this day when the index actually made a gap down, and then it was a oops reversal day and immediately reversed, this is how the stock was. It was already leading the market. Before this day, it was already leading the market. And under market pressure, it also gapped down, but you can see the angle is much better than the market. And in the next 2 days, this is how the index was, and it recovered quickly. So this is clear relative strength. This is the kind of stock, this is the kind of name that should be in the focus list. And many beginners do this mistake of running scans every day, and then you lose focus of that Krishna. was showing relative strength, and you go after the scan and you forget about it. So clearly you can see it was doing better, and not just once. When there was a second gap down in the index on I think 9th May, this day, when again there was a second gap down, you can see the performance of the stock. So if this stock, if you remember this behavior, you will know that whenever Krishna goes tight again, I should try to find an entry position in this stock. So if, let's see, like here it was tight, and then maybe on this day, if you had a SVRO trade, so you could have entered here. This is how it is behaving even in the last this bad person. Now it's already stretched, so I will not try to buy. I mean, now it's already what, some 200, and it's 500. It's more than 100% up. It needs to be rested. But this is how you find future leaders. And we have done this study earlier, and there are videos in the library. But again, I'm doing it after a long time, so just pay attention. The next name is, this is also not very liquid, but again. You can study it. I don't find it very liquid. For my taste, maybe it is depending on what your account size is. You can trade it, but one more clarification here. It doesn't actually matter what your account size is. If you really want to follow the institutions, you need to be in stocks which are really showing volume in millions, like 5 million, 10 millions back to back. Does not matter if you have a small account and if you're trading in liquid stocks and stocks which do not have institutional volume, then you will not get big moves there. So what is the point is that you are following big players so that you can really get that 50, 60, 70% movement there. This is also, again, you can see it moves completely in circuits only, not the kind of stocks that we can trade. This is also same story, circuits. So moving to, I will only study move to the ones that are actually uh, that have shown like a liquid behavior. This was clearly not a setup um, around this time, when the 7th April, when the gap down was there. So again, I would have not traded this. Not many purple days, not the kind of. So this is 7th April gap down, and you can see the behavior on these on the this stock showed in around this time. Not the best example as compared to this one, but maybe in the second, let's see how it did around the 9th May gap down. On 8th, this is how it was, and on 9th, you can clearly see it is way above the 21 moving average and showed relative strength. So this is the stock that in the coming days, if it had gone tight, should have been in the priority list. Next is again very illiquid. Maybe you should play around with this number and increase it to 200K or 500K. Yes, this one is liquid, and you can see that on 7th April, this is how, when the market bottomed, when the market gapped down and made an reversal day, this is how this stock was. And it ended up delivering this kind of return. GRSC, defense stock, everybody knew about it, most on Twitter, and in fact, many in the club also traded the defense stocks, and you can see how they were on around this time. They were already, you can see they were already leading the market. 20% up here and 5% up to, and then Within 2 days they recovered. Here the recovery is not, market is still below 21 DMA, sorry, 20 DMA, and here they are about to almost cross. And in the around 9th May, on the 9th May gap down, you can see there was hardly any, as if nothing happened. This is that oops reversal day, nothing happened here. So GRSE, keeping this in mind, GRSE should have had the, I mean, should have been given the priority, and in the, you can see entries here. And again, I'm not getting into the entry points, but I'm sure it offered more entries in the coming days. So when one more, I mean, look at yourself, look at the relative strength. It broke out in these 3 days, came under pressure, but did not really, uh, you can see on this day, hardly any this behavior, and then quickly recovered, and the second gap down had no impact. 9th May, in fact, it made a new high. Sorry, it moved towards new high, and you can see that impact. So again, relative strength. So what I'm trying to stress is that they were resisting the market pressure, and market bad market is the only time when you can find out, stocks, how stocks are going to, I mean, what kind of behavior they are showing in this leading, I mean, when the markets are already very strong, that's not the best time to find relative strength, because in that time, anything, even the weakest stocks also start moving when the euphoria is there. But bad time is the best time to find out the stocks that are actually resisting the fall, and you can keep them. And when you finally have a good list of some 20, 30, 40 names which are liquid, which are showing relative strength, then why do you need to run scans? Why do you need to go after scans? You just need to position yourself in these stocks, 5 names, 20, 30% allocation, and just try um, your luck there. Scans make you lose all these focus. uh, Again, this one also, you can see around this time it was making new highs, and here it gave you on this gap down day, oops reversal, R power. I had this position, and see it yourself on it gapped down on 7th April, but within 2 days it was above 20 DMA, and here it is not. And then in this time it was within 2 3 days, again it went really tight. BSC, look at yourself here, here. These, it was making circuits on this gap down day. It was already leading the market in this phase. Data patterns here, and then 9th May gap down. Intellect, no relative strength around this time, but in this gap, the next gap down, you can see that it was showing relative strength. In fact, this whole period when the market was coming down, you can see intellect was going sideways and inching up. My idea of making this video is to make you realize that scans are overrated. The real work is finding names and making your focus list by just praying that markets go bad, and in that bad market you sharpen your skills and prepare your list for the next, to find the next big names. No relative strength here, but in the second gap down you can see that it started moving, and in fact Camlin was doing much better than the market in this period. You can see that it was coming down, but Camlin was going up. DB Realty, all these names have actually given, you can, they're up 60, 60, 70, 80, 90% up in the last 3 months. Some of the names I had, mainly the the defense names. But this is how I found Zentech. This is how I found names in this time. And now, again, we are coming down. You can see the index was down 3%, sorry, 2% today, almost 2% today. And again, the same phase has started. So, how are you going to use this information? Just find out names which are now doing the same what they did around, and they should be young. Again, you need to find stocks which are at their seed stage, and not like something which is already 102% up. Like defense names are mainly already 100% up. So you need to find names which are again coming out of base and showing relative strength. Like for example, um, IT names. Like you can see last 5 days market is going down, but it's going up. And these are young names. IT names mostly are young and showing relative strength. So this is how you make your focus list, and not lose. I mean, not go after scans every day. And one more tool I've already given to you in the tool section is this sector performance. And once in a while, you should pay attention to this also to find out which sector is actually leading. And if you notice here in the defense, how to make it is already available in the tools. Just copy the layout. Otherwise, you can just add one index, the line chart, and then add compare. I mean, if you don't want to go through this work, just copy the layout that I've shared there. Otherwise, you can just add compare symbol and add as many as are there. And if you notice, I've opened. So this is like 2 hour chart last 6 months period, 1 hour chart last 3 months period. And if you notice somewhere here, it was clearly visible that this is the metal sector here. And sorry, 1 second. This is where the clear indication came that defense, the top line, is leading the market on 12th May. 12th May, 13th May period. Clear indication that we are way above other everything. I mean, it's doing everything that we want. I mean, if I compare it with the other stocks, it's doing leading the market. And then if you go to the stocks in this sector, around 13th May is you can see how many entries. Just go and study if you found entries or if you knew this information on 13th May. Cochin ship here. This is the trade I took. This is the trade I bought, one here and one here. 13th May is this. 13th, 14th May is this. After that, this 16% trade here. So knowing which sector is leading can give you an edge. Making a focus list of stocks which are actually showing relative strength can also give you an edge. So right now we are again, markets are coming down, and this is the time when you need to do this exercise and keep your list updated with stocks which are with the first, try to find the group. How do you find the group? If you have many names from one sector which are showing relative strength, clearly you have a group strength. Like, for example, IT is a clear giveaway. IT is showing relative strength. So the focus should be that you do not miss this upcoming rally. If the markets stabilize and again makes a bottom like this, then IT should be the priority because the group shows relative strength. Similarly, you find other names also. Then I think auto also, you'll find many names in auto that are showing relative strength. So bad markets should be embraced to find the next leader so that you don't miss this money that you can make. In many members here in the club have made stock like 7 7 10 10% return on their portfolio from one trade. And I'm sure you can verify that that name would have had relative strength around that period. I think somebody made, I'm forgetting the name, but you can just go and verify the best winner had this trait. So this is what I wanted to cover. If you have any doubt, if you whatever your let me know what you learned from this video. If you have any doubt, you can use the club channel and let me know. Thank you.